Hi, I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago. Well, let's face it, the market's very, very bored right now, and if not for the daily reading of the fiscal cliff tea leaves or trying to determine why Apple is up or down on any given day, there'd really be nothing to do right now. And let's put it into perspective. Except for November the 28th, the tape hasn't moved more than 10 points in either direction in the last 2 weeks. All eyes right now are on the fiscal cliff, and we're really lacking of anything that's changing the macro narrative. But let's start off with equity. Equity vol right now a little bit firmer across the board, but single stocks are leading the charge right now as correlations are declining 2 days in a row. We're seeing a little bit of a divergence between volatilities of the Dow, NASDAQ, and the S&P 500, but all of them are a little bit firmer across the board. Moving on to foreign currency, the dollar generally higher, and so are volatilities. But let's keep in mind that when we look at the European vol, especially Swiss franc and euro currency, that vol has been trading awfully cheap, probably the cheapest, the third percentile, I think it was, over the last 3 years. And right now we're seeing vols a little bit firmer across the board, but notably in the Aussie dollar and also the Japanese yen. Let's look at the energy sector. You have both crude, nat gas really taking it on the chin today, but volatility definitely isn't. 2 days in a row, volatility up about a half a point in 3-month vol. Vols are actually a little bit firmer when going out 6 months to a year. But again, nat gas and crude oil both taking it on the chin today. Moving on to gold and silver. Gold and silver both have had a bounce back today. Vols also firm. It seems like that's the tone of everything with CME asset class right now. Gold did move up a little bit past a key 1700 level, something it broke just yesterday. Vols are firm, but they're not that high right now. They're still trading pretty cheap compared to history. Now, ags are trading generally much cheaper across the board, especially when you look at wheat vol and we look at corn vol. Vols have come off a little bit, and that's really counterintuitive given the moves that they've had today. But it seems like volatility has been building up for a big move that we've had today, and we're just seeing people selling the long vol that they've had. So in a micro sense, right now we're looking to BLS report tomorrow. Let's see what happens to vol. It seems like the street's penciling in about 100,000 ads. And beyond that, again, we're looking at the fiscal cliff, and just it seems the same old story stays true, is that we're just muddling, a lot of toil, but no trouble. So that's the way we see it. I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the...
Woman possible? I have no...
Right, but what's that?
Oh, sorry. She's...